All right, guys, my Roth IRA retirement portfolio has gained some stability. Still getting some income there, but I've been buying a few, well, not buying new things, but I've been adding to some positions. So I'm going to share you guys what's going on right now so far in my Roth IRA. Give you guys a quick update there and share with you guys my future plans for this portfolio as well. So let's get into it. Let me record the screen on my phone. 3, 2, 1, bam. All right, here we are in my Charles Schwab. This is my Roth IRA account, and this is 11 something in the afternoon, in the morning here in China. Yesterday was Friday. The markets were red. My portfolio was also red, but not much, not quite 1/4%. You can see this portfolio has been recently going under a lot of changes because I was mostly invested in only income here. And I changed my mind because I can't touch this portfolio for a long time. And I want income now, like that I can use now because I'm living abroad and I don't want to work. So this portfolio, I've been shifting the focus more towards growth, but a little bit of income so I can, keep buying more stuff on a regular basis instead of buying it, like putting money in this portfolio. You can only put like $7,500 per year. If you put the whole chunk in and spend all the money, then you don't have money to buy anything else. You can't do anything because you don't have any income. So I do invest in some income here so I can reinvest the money every single week to buy more stuff. So anyway, now that you know that, let's look at the portfolio. First of all, I've got $53,674. And if you look here at the top, these first two are basically my lottery ticket plays. They're like speculative growth. I think they're going to do really well over the next decade. And so I have these here, very small portion of the portfolio. And I do sell cover calls to get some income on these. But I have Rigetti, Quantum Computing, 100 shares. And I have SoundHound AI, 100 shares. Okay, and then if you look below that, I've got XDTE, which is my income, my weekly income, and I can use this money to buy shares of other stuff. XDTE, 237 shares. This is the S&P 500 0 DTE cover call ETF, pays every single Friday. Below that, I have SCHB, which is basically the US broad market. It's basically the entire US stock market. So this is where I get my slow and steady growth because, the US economy usually does okay. The stock market usually goes up. So this should go up over the next 17 years, hopefully. 345 shares. I'm slowly buying a little bit of this on every red day. I buy a few shares here and there, add to the position. SCHG, you can see it's the Schwab US large cap growth. So this is basically all the big large cap stocks in America. This one, I have 275 shares, and this has bigger and better growth than the overall index because most of these are like the biggest, best companies in America. So that's why I have this one to get more growth. So SCHG, 275 shares. And again, just like SCHB, I'm adding to this every single red day, a couple of shares here and there. The next one you see is QQQI, which is the NEOS NASDAQ 100 high income ETF. So this does have some growth, but it also pays income each and every single month. Think of like your JEPI or JEPQ. I guess it would be similar to JEPQ, but JEPQ doesn't have the whole NASDAQ 100 in it. This does have the whole NASDAQ, and it's like a 12 or 13% yield. So, and it goes up. So not too bad, but it's not gonna grow to the moon, but it does pay income and it does grow. So that's why I like that one. And then at the bottom down here, I have SWVXX, which is just basically like a place to park some cash and get some interest on it. This doesn't move at all. It's $1, never changes from $1. And right now, it's about a 4 or 4.2% annual yield, but it pays every month. So it doesn't pay 4% every month. It's 4% annual, but it pays out every single month. So anyway, I have that one. And then I have $15,000 in cash that I need to buy stuff with, and I'm slowly using that money to buy shares of everything on the red days. So that's what's actually in the portfolio. Now I want to take you guys into the spreadsheet and show you what this looks like and how it's all performing. And then I'll get you guys out of here. New screen recording. 3, 2, 1. Bam. All right, here we are in my spreadsheet for my Roth IRA. See right there, IRA 2025 at the top. Here's all the things that I just shared with you in the portfolio. You got Rigetti, SCHB, XDTE, SCHG, QQI, and SoundHound. And this blank position was something I had and I sold and I just cleared it out. That's why there's a blank spot there. But all the shares and all this stuff is the same. I just showed you in the portfolio. But I want to share with you guys the return and the performance and the income I'm getting from this, as well as some of the allocation plans and stuff. And here's this stupid spreadsheet thing again, man. This thing is annoying sometimes. I ain't gonna lie. All right, so at the top, I'll put the blue box around it. Rigetti. You can see market return is up, total return is up. We got a 41% total return. And there's a reason why this is different than the market return. This doesn't pay dividends, but I did sell covered calls on this and earn a little bit of income. So it does increase the returns by a little bit. SCHB, again, the market return and total return are positive. It's a 4.73% total return. This does have a dividend, but it's a very small one, and it pays quarterly. XDT is my weekly paying ETF, pays me money, income every single week, like a 25% yield or something like that. Total return is positive, but the market return is negative. But it's a 4% total return, and this is where I get some income to buy stuff every week. SCHG, my big cap growth. You can see this one is positive all across the board on everything, and the total return is 4.2%. And as I mentioned, I am buying SCHB and SCHG on every red day I buy some, but it slowly averages up because it's just going up and growing. But I haven't got the position size that I want yet, so I got to keep buying and averaging up until I get position size that I want. QQQI is my monthly paying income ETF, but it also has some growth built in, but not a lot. But you can see here that it is positive across the board, so it does grow a little bit. The total return is 3%, but the market return is only 1%, so it had a little bit of growth. And then we have SoundHound, my Sound AI lottery ticket play. You can see this one positive across the board, 34.5% on the market return and 36% on the total return. So overall, doing pretty good. And oh yeah, when I mentioned to you guys about the allocation, let me get this over here so you guys can see the ticker symbols. Maybe. I'm trying. Bear with me. All right, so here we are. So you can see my portfolio allocation, only 3% in Rigetti and 2.5% in SoundHound. So like 5% there in my lottery tickets. And then I have SCHB and SCHG. So these make up about 31% of the portfolio. And I want to get these to over 50%. So I have a long way to go to grow these. I need to get 20 more percent into these funds. XET is 20% of the portfolio, and I'm fine with 20%. Well, it's slightly less than 20%, but I'm fine with that. If I can get these to 50% and then this to 20, that's 70, right? And then we have 5 here, 75, 80, and then I have an extra 20% to play with, where I can do something like a mega yield, maybe 10% into like a mega yield, and another little small percentage into add another lottery ticket play to this. Is something like that will be my ideal of what I want to do. So so far it's getting there, slowly getting where I want it to be, but not quite. Like I said, I want 50% here, so I got to get this to 25 and this to 25 or something like that. So we're on the way. Let's go check out the payments I've received, and then we'll wrap this thing up. So I did have some other funds here. Like I said, I sold them all. So right now my dividend income in this portfolio isn't huge, but I would like to increase it so I can buy more. If I have more income coming in this portfolio, I can buy more stocks every week, right? But anyway, if you look down here for the month of August, I made $18 in Rigetti from covered calls. I sell them way out of the money, like at a 5 delta. So they're very conservative because I don't want to get this called away. I just get a little bit of money from it. So anyway, 18 bucks there. SCHB did not pay me this month, but I'm sure it will pay here in September. So nothing from SCHB this month. XDTE paid me $271 this month. So a little bit of extra money there to buy some stuff. SCHG, same like SCHB, it does not pay this month, but it will pay next month, I believe. So nothing there. QQQI paid me $32. Again, more money I can use to, buy more stuff. And SoundHound, this is some covered call income I made from selling calls on this. The same like Rigetti, I sold these very conservative, way out of the money at like a 5 delta or 7 delta, something like that. So very conservative, highly unlikely to get called away, and just get a little bit of extra money. And I do that like every single week just to make some extra income. But I didn't sell any this week because the market was red and the premiums were really low, and I was afraid if the market turned around and spiked, then it would blow through my covered calls and my shares would get called away. So I decided not to sell any this week. So if you look over here, we can see the total amount for the month of August. I made $1,328, and that's mostly because I had MSTY, which paid me a mega yield or mega dividend, $987. But I sold that position. I no longer have it. So next month, this is probably going to be much lower unless I, put my cash into another mega yield producing ETF, which I'm okay with doing that, but not a huge position. I would like to keep it like 10% of the portfolio or less. So you might see something new pop up here next month, and it might be a high yield payer because I need some income so I can buy more stuff. So you might see that. Be on the lookout for that. And yeah, that's really all I got for you guys today. So far, the Roth is doing okay. It's slowly growing, slowly doing better than the other portfolio as well. So if this grows too much, it might catch up. It can't grow too much, but if it keeps growing at the rate it's growing at, it might catch up to my other portfolio without even having to add much money. So that's really all I got for you guys today. If you guys want to know about how I actually got this money to invest in the first place, I'll put a video on the screen here. You guys can go watch that, and it'll show you like how I managed to earn money and invest and eventually break away from this 9-to-5 thing. So go check that out. Check out the links below. Lots of free stuff down there and some other stuff you can check out that you might find interesting. And I'll see you guys on the next video.